Okay, we're talking about how to improve your credit scores. In this video, I'm going to break down the 5 categories that make up your score so that you can understand what's most important in the eyes of the bureaus. We'll start with payment history, which make up about 35% of your score. The key here, it's simple. Make your payments and don't be late. Creditors reporting late payments of 30, 60, and 90 plus days can have a significant negative impact on your scores. Why? Well, creditors want to know that they can count on you to repay as agreed and on time. So a consistent history of on-time payments is crucial. Right behind payment history is balance versus limits. This is the second largest factor in calculating your credit score, as it makes up about 30%. This category mostly applies to accounts that allow for open revolving balances, such as credit cards, lines of credit, and home equity lines of credit. 10% or lower is the recommendation for optimal range for all your open revolving balances. So let's say you have a credit card that has a limit of $5,000. To get the most favorable impact to your score from this account, you'd want to be consistently showing no more than a $500 balance when the creditor reports your info to the 3 bureaus. That's because the bureaus like it when they see that you're not being too reliant on the available credit you have access to. Next up is age of accounts, which make up 15% of your overall score. Length and time of all open accounts on your credit report does play a part in your credit scoring. Now, if you're considering closing out an account, in most cases, it shouldn't be a devastating blow to your score, but it's still something to be mindful of. If you're going to close out an account that has had a good history, you may see a temporary drop in your score, since it was an account that was contributing positively to your score. Then we have account types and inquiries. These categories make up 10% of your overall score. For inquiries, you have a soft inquiry, which is typically used as a request for information. For example, a background check. This type of inquiry doesn't impact your scores. Then you have a hard inquiry, which is basically a direct request for money. When it comes to mortgage lending, you should know that you have a 45-day span for all of your mortgage inquiries before they start to impact your scores. And shameless plug, but this is where working with a mortgage broker like myself can be very beneficial, because we have access to over 100 lenders, but we only have to pull your credit once to be able to shop all those lenders for you. Now, to conclude, let's talk about the most impactful steps you can take right now to improve your scores. Step number 1, if you have credit cards or any other type of revolving line of credit, get those balances under 10% or lower. An improved proportion of balances for your revolving accounts gets the bureau's attention faster than any other action you can make. You typically see the changes made to your scores within 30 days. If you don't have any revolving accounts on your credit, best action step to take is to go to your local bank and apply for 1 or 2. If you're not able to qualify for them right now, look into secured credit card options, or see who in your family would be willing to allow you to be an authorized user on their revolving account. Those alternate options won't have the same impact, but it can help start to build your credit profile to where you can qualify for a regular credit card. Now remember, the goal is to utilize these revolving accounts as tools to improve your credit profile and score. Don't let yourself get too dependent on them. Step number 2, get rid of anything derogatory on your credit report. If you have collections, pay them off and see if the creditor or collection company will agree to have it removed from your profile. Step number 3, make your payments on time. If you have any late payments that are legit, unfortunately, that's like shooting yourself in the foot when it comes to your credit, because that is now affecting your payment history. So it may take a while for your credit profile to heal from that. The best thing that you can do is to stay focused on rebuilding your payment history by making your payments on time, along with maximizing your revolving account activity by keeping your balances low. And those are the steps of how you improve your credit scores and maintain good credit moving forward. Hope you found this information helpful. If you did, please give me a like and subscribe. And friendly reminder, I am a mortgage broker and would love to help you with the process of obtaining a home loan. If you would like to start an application with us, you can find my application link in the description below. Thanks for watching, and God bless.